smartly. And we're really privileged to have Jamie Oliver from Shopify Plus on. You guys may be aware that one of the founders of Shopify is an investor in the fund and therefore all the portfolio companies. And we had a request from Koh Kim for a little Shopify love. And so we reached out, we're able to get connected with Jamie, who's done way more than just helped Koh out, but really talked about how in a environment where there's not retail, at least not much retail out there, how do we up all of our e-commerce games, connect with customers in better ways. But Koh, good to see you.
Sorry about that. I was on the other software. So.
No, it's all good. Great to see you. So we're going to kick off with Koh and Jamie talking a little bit about the problem they were trying to solve, but more generally just sort of the ideas that they've got around leveraging partners. Ko's going to be jumping off the call at 1:30 because she's got another partner target that she's got an important deal to land with. So we're going to let her go quickly. So then we'll talk a little bit about where cash is sloshing around on the planet. We've got Mac and Andrew to maybe weigh in on that, but really sort of upstream. How do we think about markets where cash is flowing, where it's not flowing? We'll have a quick update on COVID-19 from Dr. Rawlinson, his perspective and some insights, and hopefully have time for some good news at the end. So with that, I'm going to kick it off to Jamie and Koh to talk a little bit about Shopify and how you can leverage that platform, and then we can open up talking about partners more directly and how to engage and have impact. So Koh, Jamie, thank you guys for taking the time.
Thank you, Chris. Yeah, so my name is Koh, founder of EvenPrime, D2C unisex skincare for the gaming generation. And so, Jamie, you want to introduce yourself quickly, and then I can probably ask questions.
Sure. Yeah, Jamie, I've been with Shopify for about 6 years or so. For the past 2 of those years, I've been working on building a partner program that interfaces with a lot of VC and PE firms. Did invest in the retail space, and that's both investing in the retailers themselves, but also the technologies that power retailers. Whether or not they are within Shopify's ecosystem or not, we like to make those introductions and obviously help enable their portfolio to do, to add value to their portfolio.
Yeah, so I think, for starting off, so I think initially Jamie and I were connected just because I, as a brand, is always curious on like when would be the best time to upgrade or the reasons for upgrading to Shopify Plus versus the current Shopify platform. I mean, I've always been impressed with Shopify's tools anyway, but Jamie, if you can like just share like, kind of like what are some of the key differences between Shopify regular and Shopify Plus, and then like what questions that companies should ask themselves on whether the move to Shopify Plus is the right thing or not for their company, for their business.
Yeah, absolutely. And before I dive into that, I can give you a bit of background into Shopify Plus. So Shopify Core started in 2005. Shopify Plus started in 2014. And that real need came from the increasing complexities as businesses started earning more and more money online. So when we first launched Shopify Plus, it was typically an upgraded or a graduate program from Core to Plus. It was looking at our current merchant base. Since then, we are now going after companies that do between about $1 million all the way up to $1 billion. So we have about 4 or 5 to do close to $1 billion online that are selling internationally. So typically they're hosted on some homegrown solution or perhaps one of our competitors. But typically when we're talking about when to make the switch to Shopify Plus, it really comes down to one, revenue. That seems to be a huge trigger. So typically around the $700,000 in annual online sales is when people start thinking about that switch, given the complexities of their business. And that comes from, managing a lot more staff, right? Managing a lot of marketing campaigns that could be automated. That's where Shopify Plus slots in quite nicely, as well as when it comes to the complexities of actually building a store or integrating with a number of different back-end systems. That's where we see a lot of Shopify Plus merchants turning to our agency partner program. For agencies and systems integrators that can help facilitate that migration, as well as plug in those enterprise level apps that can handle the velocity, can handle the volumes of sales that's landing on their page.
Hey, Jamie, can you talk a little bit about that inflection point around $1 million? Because pretty much most of our portfolio companies that are D2C are on Shopify. So that's, the they're really good news, and some of them, like Love Pop are 40 million revenue plus and growing pretty nicely, and really seem to be able to use Shopify Plus and looking for some of the new features like Shopify Capital and the email product that you launched to integrate more. But we also have companies like Harper Wild, where they found, even though they're around 2 million in revenue, found it a little bit heavy to use. And so I'm just curious your thoughts on sort of your earlier point about when does it make sense to lean one way or the other, and how do you manage it at lower scale?
Yeah, at lower scale, sometimes it does come down to the merchant success services that we have as well. That being said, like I run into a lot of evaluations where people are doing 4 to 5 million, and Shopify Plus might not be the best fit. But when it comes to really lean teams, sometimes it makes sense just from a support standpoint, because each store that works with Shopify Plus goes into our merchant growth model. And that's essentially an upgraded services. So if they run into issues with how do I start a Black Friday sale? What sort of plugins do I need to run my email marketing campaigns? Those support folks are the ones that they would lean on. And so they're trained and work within the enterprise space. So it can come from a support angle. And there are triggers when it comes to the actual financials behind it. There are lower transaction fees on Shopify Plus. So at a certain inflection point, it actually makes more sense just from transaction fees to switch over to Shopify Plus as well. So hopefully that answers your question, Chris.
It does. The ladies running Harper Wild, I think, need a better merchant services person, so I'll contact you on that separately. But I appreciate.
Yeah, absolutely. We recently pivoted. So it used to be that we had a merchant success manager for X number of stores. So I think it was like each manager had about 30 to 40 stores. They pivoted from that model last year into a merchant growth model, which is very much more self-serve. But if problems do arise, then they would work with a one-on-one with one of our merchant success managers. But I'm happy offline to point them in the right direction if that's the case.
I think with that, like on the merchant services front, Jamie, do you want to like talk a little bit more about like what type of, I guess, like issues or like scenarios that the merchant services team can help, like let's say brands are kind of have access to that?
Yeah, absolutely. We see a lot of it around Black Friday, as I mentioned earlier. As people start building campaigns, a lot of them maybe have never done it before, or maybe they want to learn how to turn it on and off. And there are Shopify Plus specific capabilities like Launchpad, where you can actually build in sales campaigns that switch off at specific triggers, and that could be at an inventory level, that could be at a specific time of day, so that you don't necessarily need to have someone sitting in front of a computer turning it on and off at different levels. So merchant success can typically help out with when or how to build those specific campaigns. And as I mentioned on the other side, when it comes to technology recommendations, I mean, right now, if you go into Shopify's app store, there's over 3,000 apps that you can plug into your store. Shopify Plus app partner program is about 40 right now. With that said, there is a lot of options out there for people, and sometimes it's just information overload, right? So they need to trim that down, and a merchant success manager can really hash out what are the requirements, what are you looking to build, how big is your team, so that you can actually properly service that, and then point you in the right direction. Maybe it's 2, 3 apps that might be a good fit, and then they can make the decision from there.
Cool. So how, I guess like kind of switching gears, like given the current like COVID situation and like a lot of people are now kind of online, one can say that this is probably one of the best opportunities for any company with an online business to like really take advantage of this situation, or at least like pivot it so it's into their advantage. And so how has Shopify been helping its brand partners and even just people within the ecosystem to kind of address kind of like this current environment?
Yeah, absolutely. That's a great question. We'll start with the people who aren't online first. There are a ton of companies that are doing that. Their primary business was brick and mortar. So it's their first sort of foray into online. And so what we've done is, if you go to shopify.com/COVID-19, there are virtual, essentially, webinars and playbooks about how to start a Shopify store. And then there's some that go a little bit deeper in terms of how do I become a drop shipper, or once again, what technologies can help me power, X, Y, and Z type of situation. So there is that. as well as the Shopify Capital piece. I think that there's a lot of information swirling around about that. And just for the folks who might not know what Shopify Capital is, it's essentially a loan from Shopify to Shopify merchants. So if you have a store and you've been on for approximately 6 months or more, we can actually track the profile of, okay, you've sold X number of dollars, we will offer you Y loan, and then you can actually pay that back through the sales within your actual store, which is pretty neat. And we recently expanded that offering to Canadian merchants as well as folks in the UK. And typically we see the ceiling within Canada, I believe it's 500K check sizes. And in the States, it's $1 million. So there's pretty sizable checks that can help with cash flow amongst COVID. And then there's the push for gift cards. I think when it comes to cash flow, and helping making sure that people have that runway. Gift carding is now free across all plans. So folks who didn't have access to that before have it now, which is awesome. So those would be the top really 3 that I'm seeing right now as Shopify starts helping and supporting their merchants through these challenging times.
Great. And then I guess specifically for Shopify, because you said it was available in the US, but I guess from as far as I understand, it's only within specific states, because I don't think California is included in that. So do you have a general sense of like timelines that are opening for that specific opportunity, or?
Yeah, I'd have to look at the specific timelines. They had extended timelines, I'll be honest, on a lot of these product launches they included, but and they've accelerated those just given the COVID, the environment that we're working in. But I can work offline to figure out what that would look like for California specifically. But I know that if there were any timelines in place, they've definitely been pushed earlier.
Yeah, right.
The other piece is, sorry, just before I forget, Shopify email was another one of those product features. So
that was my next question anyway.
Oh, was it?
Yeah.
I'll let you answer the question.
Yeah. I think, well, I was just like wondering that, that's like the piece on the financing. I mean, the biggest piece, at least for me specifically, is what are some specific, I think, marketing features that, Shopify has been kind of moving towards with, a lot of the new features rolled out, whereas a lot of it's focused on like Kit and like some of these other marketing features, but email is like a new one too. And I know for us in particular, like being able to communicate and engage with our customers on not only a personal level, but at like the right moment and right time is incredibly important. And so would really love to like hear more about Shopify's plans into that and like what programs and like features are becoming available, especially in regards to Shopify Mail and some of the other ones.
No, absolutely. Yeah. When I think of Shopify, right off the bat, we want to be able to do about 80 to 90% of what a merchant needs to do out of box. That other 10% is typically serviced by one of our app partners, very similar to an iPhone. It's great product out of box, but when you want to really customize it, or if you have unique needs or requirements, that's where you typically turn to Apple's App Store. Shopify's App Store is very similar, where you can just plug and play into your actual store. Email marketing was one of those things that we didn't actually do out of box until about 2 weeks ago. So we launched Shopify Email, and essentially it's an out of box email marketing tool where you can actually choose templated emails and then really nurture those customer relationships. And so that was one piece that we found. Shopify will typically acquire a company or build it itself if it appeals to the masses. And obviously email marketing is definitely appealing to the masses, especially amongst COVID, where that natural sort of brick and mortar store where you can have that experience isn't available anymore, right? So it's how do you communicate with your top merchants or top customers and communicate the challenges that your business is facing, or maybe it's a specific ad or a campaign that you're running amongst all this.
And I guess like how should one, because a lot of the brands I know myself, like we run using Klaviyo or some of these other email marketing software. So how does Shopify Mail compare to like some of the other tools that are on the market, or where do you hope Shopify Mail could become, or how it positions itself?
Yeah, it's right now, it just launched. Would I recommend it to, merchants doing over $1 million, like on the Shopify Plus side? It would really depend on how early they are in that stage, but it could be a really good way for them to just test it out. Like, do I really want to do email marketing, or can I handle this? Do I need someone internally to run it? But typically when you get to those more complex merchants, I typically recommend some of those apps because they've been doing it. That is their bread and butter, and it's been their bread and butter for a number of years. So they are better at it for now. But once again, Shopify is known for we have thousands of developers internally, and we typically catch up quite quickly. So there are a number of hopefully we can get to that stage where we can handle those complex merchants. But as it stands today, it's still very new, and I think there are a number of different pieces to the puzzle that we have yet to include.
I guess like on another vertical, besides marketing, another vertical that comes quickly to mind, especially now, is the supply chain and logistics piece. Given that a lot more people are shopping online or getting stuff, so delivery of that good is very important. But then also for a lot of these brands whose supply chain may have been disrupted, depending on how severe COVID is currently right now. And then, so what are some things that how do you help kind of brands kind of navigate those waters, whether it's like with Shopify's internal 3PL that's looking at, and then also kind of just even moving forward, working with other partners in the ecosystem?
Yeah, absolutely. Couple pieces to this one. One is if people are feeling the pinch due to supply chain challenges and they don't have the inventory to actually sell, that's where we see them turning to capital to get that longer runway as they walk through this, and hopefully it's hopefully it's over sooner rather than later. You see folks in China and some countries in Europe starting to open up their supply chains a little bit more, so hopefully it doesn't last too long, but a lot of them are leveraging that capital offering just to get through the next couple months. We are seeing a lot of merchants turn to more localized supply chains, which is a huge challenge, obviously. But it's if they can figure it out, I mean, obviously that's a great scenario. Again, back to the Shopify Capital pieces, if they can buy things in bulk as well at a cheaper rate, maybe they can leverage Shopify Capital to do that as well from a supply chain side. And then from the fulfillment side, that's a fairly new product that we officially launched last year in beta. And it's been going tremendously well right now. Just for the folks in the room who might not be aware of Shopify's fulfillment network, but we essentially want to be our own fulfillment center, or have fulfillment centers across the United States, Canada, Europe eventually, but right now they're only in the States, and essentially have that one-day shipping option. But the key piece to that and the real push for it was that you get to own the branding moving forward. If you think of Amazon right now and you buy something on Amazon, it comes in an Amazon box with Amazon packaging. There's really no customer experience that you can craft. With Shopify Fulfillment, you can actually give us your branded packaging and actually have that fulfilled from our centers. And once again, right now it's still very beta, so there are some stipulations around that in terms of number SKU count. Under 300. We're not shipping anything regulated or anything that needs to be in a safe or refrigerated, or anything typically bigger than a microwave at this point.
Cool. I guess one other thing that takes care of one piece. I think another piece that always kind of comes to me, and it definitely related to me earlier, is Shopify Pay and the modes of payment. It's great that anyone can browse. I mean, it's obviously you need to have product and you need to have product to sell, but if a particular customer doesn't have a way to pay for it or may not have the available means to pay for it, then it's almost like a lost sale. And so, Jamie, can you talk more about in regards to Shopify Pay, how do you think that is positioned against Square, Stripe, and some of these other payment processors that are kind of looking at the online payments market, especially now or maybe even post-COVID? And then how is Shopify helping getting more these consumers that may have been coming online for the first time, getting them to make that payment or be able to pay for things online?
Yeah, absolutely. Yeah, Shopify Pay is a super powerful tool. I love positioning that to a lot of merchants, just given one, it facilitates the checkout. I think it's, when you look at multi-site checkout or multi-step checkouts, you're seeing huge drops at each step. And when I work with a lot of legacy retailers that may or may not be owned by private equity firms, that's typically one of their huge steps. It's our payment processor takes forever, or it's not consistent, et cetera. So we see a lot of them turning to Shopify Pay. There are fraud analysis and prevention measures within Shopify Pay as well, which is super key. And you can actually toggle them to your specifications if you want it to be a little bit looser on the fraud side or really, really tight, and ping you every single time you see specific orders with specific triggers. You can assemble that. So it is super powerful as well. Once someone signs out on Shopify Pay and you create a login at any other Shopify store across, whether they're a core or whether they're a plus, it will actually remember all of that data. And then so once again, that checkout is actually facilitated even further, which is pretty neat. And again, we have over 1 million merchants right now. So not all of them are using Shopify Pay, but the more that use it and the more that it is used, our fraud analysis becomes that much stronger over time, which is pretty neat as well.
I guess like in some time in the future, and I don't know if Shopify is thinking about this, but is there any way for, let's say, brands to be able to like leverage some of that data, whether it's on like an aggregate, this private level, just so it help us, but to make better marketing campaigns, more targeted advertising campaigns? I mean, we've already seen kind of Amazon do this on top of their own network, is building and add their own advertising stuff on top of that. So how does Shopify look at probably even the online advertising space, especially as more merchants are kind of being part of the network?
Yeah, absolutely. That's the biggest knock on Amazon, right? Is if you sell on that, the data is no longer yours. On Shopify, you can still see the consumer data, but when it comes to the payments piece, obviously, that's something that is a little bit dicier. But in terms of owning the consumer data, or anyone that lands on your store or shops on your store, that that data is yours, and you can play with it as you will. Unlike Amazon, it owns the entire thing, which is a huge challenge for a lot of merchants, right? They're trying to get an understanding of who are they selling to, where do these people live, what is the sort of demographics of those folks. So once again, I think that's another selling point for Shopify Fulfillment, that you don't need to push them on to Amazon, and then you get to actually own that entire consumer experience, as well as the data that goes along with it.
Okay, cool. I guess like we'll open it up to the floor because I have a few minutes and then I also have to jump. Is there any other questions from chat, or anyone want to jump in particular, ask questions of Jamie?
Yeah, one of the things, because we had to jump in quickly, I didn't get the chance to headline it, and we'll talk about this later today, and sort of the impact on COVID on retail generally, and foot traffic. And to put it really clearly, Shopify is turning into Main Street. So if you haven't figured out what Shopify is or what it represents going forward as sort of the antithesis to Amazon, like I would lean in and get as smart as you can. Again, most of our D2C portfolio companies are using it already, but I think the market cap of Shopify, just to give you a sense, has doubled post-COVID from the 30 billion mark to over 72 billion. Jamie, I don't know how much your merchant value is in terms of going across the platform, but I imagine that's also growing pretty quickly. And the thing I love about Shopify is the ethos of it. You heard Jamie articulate it, but they basically want a merchant or an e-commerce or a mom and pop on Main Street to be able to connect with their customers, still have their brand, and enable all that in the background, as opposed to sort of the Amazon approach where the board and everything looks like Amazon, feels like Amazon, and they're your partner and your competitor. I think the Shopify ethos is going to be really critical going forward.
Yeah, absolutely. I think from the beginning, if you ever hear Toby speak, it's all about lowering those barriers to entry for the folks who might not be a developer, they might not be a designer, but they're able to spin up a shop, which is pretty cool. Like I know my mom, when I joined Shopify, I was like, hey, try and build this store, and she's not very technical, but she was able to get started, which is pretty neat. It's a super powerful tool, and it's really great that we can help the small medium businesses, but we can also power those really big ones that are also feeling the pinch amongst COVID as well.
So I know there's a ton of things we could do in around partnering. We wanted to showcase Shopify because they are being used by almost all of our D2C portfolio companies, and they're also engaging with some of the technology-focused platform companies like Ninth Decimal, Senso, hopefully SignalWire, as well. So there's lots of opportunities to engage in effectively what's going to be the Main Street of, all of our retail experience going forward. So if you're not super smart about it, encourage you to get smarter about it. We're very privileged to have Jamie as sort of a pathfinder for us to navigate through, a very big and growing company to try to have impact.
Yeah, and happy to play that conduit for any questions that you do have, or if you're looking to learn more about, our technology partner program, for instance. Happy to kind of field those questions, and at least, once again, as Chris mentioned, point you in the right direction.
Go close target. Thank you for highlighting and get that partner deal done. Appreciate the flexibility on everyone else.
Yeah, thank you. And sorry I have to jump off early, but it was good seeing everyone. Stay safe and healthy. Wish me
Thanks,
luck.
Jeff.
Me
Hey,
too.
bye.
I think Jamie's able to stay on for the next half an hour. So quickly, are there any other questions for Jamie before we switch gears? Okay. I know Sarup, you're already engaged. Jamie, I've got to follow up on Ninth Decimal. Mike Fordyce was hoping to join, wasn't able to, and the same thing with Harper Wild, but they've got some things I think you could be helpful with.
Absolutely.
Oh, and Love Pop, sorry, one more. Everyone's on Shopify these days, it seems like. Second topic, I was going to open up with Andrew and Mac, but I think one of the challenges everyone is trying to face, and we talked about this last resilience call, was around, is this a V, is it a U, is it an L in terms of the recovery? I think the solid consensus is it's going to be at least a U and maybe an L. But Mac and Andrew Goodman's a friend of the firm, works with Nixon Peabody out of Boston, but working with a lot of companies trying to navigate this world, PPP financing, and also very smart on not your average guy from a law firm either. So very smart on capital markets. So Mac, you want to kick it off and just say sort of your headline on where you think markets are, when people can expect liquidity, and from where.
Happy to. Nice to meet everyone. Sorry, I have lack of bandwidth because my kids are upstairs on video Zoom for school, and I get the short end of the stick.
AKA Fortnite?
I don't know. I haven't checked in yet, but they've been on Minecraft lately. Anyhow, trying to get my son to run a server to get some income into the family. But everyone's reading the headlines, and I'm not an economist by training, but I've been on Wall Street for 30 years, and this is my fifth kind of downturn cycle. It's amazing that they kind of come every about 8 to 7 years lately, but I never envisioned a global pandemic as the catalyst for this downturn. So hard to predict because no one has a playbook for what to do in a global pandemic. But talking to a lot of smart people and just listening, the general consensus I think is, pick your favorite letter of the alphabet. Is it going to be a V, a U, or a W? I'm not smart enough to predict what it's going to be, but I know that every downturn I've been through, the rebound is not as fast as everyone thinks it will be. And I think my current metric is every month this kind of goes on, it's going to add about 6 to 9 months of recovery time, just because of the magnitude of the shutdown. I mean, we've never put an economy on hold and then resuscitated it. So I think it's going to be an interesting restart. The faster we get back to business, I think the faster the recovery is going to be for everybody, although it's certainly going to be different. And I won't opine on the future of work or what it's going to look like. But I do know that once, revenues can at least get back to 50% of what they were, not 0%, there's going to be money flowing through the system, and it's going to benefit, everything in the economy. So I can leave it there. I could go on and on, but I don't want to take up all the airtime, Chris.
Yeah. Andrew, do you want to jump in and sort of your perspective from Boston and the companies that you're working with, where are they getting capital, and then sort of what's their outlook for capital access, through the balance of the year and into next year?
Sure. Well, let me just say, Mac, that was a great overview. I echo a lot of your statements on the economy. Like yourself, I've seen a lot of downturns. Been on Wall Street about 25 years, and I would agree. The letters, the acronyms, they rhyme. And so, what I would like to say is, I'm not an attorney, and this is not legal advice. I just have to say that I'm a Wall Street guy, a deal guy, and I just have to preface that. So with that being said, over the last 4 weeks, a lot of my conversations have been around the CARE Act, particularly with small businesses. Do they qualify? How can they get capital? and when will they get the capital? I think over the next 4 weeks, maybe even 6 weeks, it's going to turn into, what do I do after I receive some of that capital? If I qualify, and if I don't, where do I get financing? I would say most investors that I'm talking with that range from high net worth to family offices, venture, private equity funds, most of them are yellow lighted and are waiting to see where the dust settles. Part of the good news is I'm aware of a bunch of private equity firms and family offices that are running toward the fire. And I know of 4 off the top of my head that have put out 3 or so term sheets that have funded deals. So deals are getting done, albeit a lot less than what are on the table. And what I would say is that, you know, if you are trying to raise capital, there are investors out there that are putting money to work, and you just have to, it takes that much more effort to get in front of them these days.
Question for Mac and you know, and for Andrew. You know, one of the things that, you know, I've got a lot of conversations from entrepreneurs about, you know, should they be approaching the venture capital folks? And the consensus seems to be out of the venture industry is that if you don't have an existing relationship, it's probably a waste of your time. And I just wonder if you guys echo that, or if you got a different perspective.
I mean, Mac, do you want to take? I can take a swing and love to hear your perspective.
Yeah, why don't you go ahead? You
Sure. So I think that's consensus, and I think, you know, Chris, you and I have talked a little bit about where we stand today. Nobody knows when we will open back up, and there are a lot of investors that I would argue will not make an investment without meeting the person or the team and being able to conduct due diligence. However, the way I'm approaching it, the way I would approach it if I were on the other side of the table raising capital, is this time is really an opportunity to get in front of people, let them know who you are. It's a touch point, and I think there should be some percentage of your time, and you have to weigh it accordingly, but it does allow you to reach out to people. There are people around and looking for activity and looking for investment ideas. So my approach would be 5% of your time should be on cultivating new relationships, whether it be VC, private equity, or the family office space. Mac?
Spot on, your brother from another mother. The challenge is you don't have to raise money right now. I wouldn't attempt it. I know a lot of companies that are trying to add money to their war chest are doing so, but I think the terms are egregious, and a lot of folks are looking for deals in a downturn. So it's kind of caveat emptor. You know, but if you do have to raise money, there is a lot of money still in the system. I think just the terms of engagement have changed. And talking to my clients that range from early stage venture funds to late stage venture funds to distressed restructuring turnaround funds, so the full gambit of the capital structure, everyone's looking for a deal. And you know, the challenge is that they're drinking out of a fire hose because a lot of people need money. So I think, to your point, a relationship certainly always matters. I'm in the relationship business. It's pretty hard to cold call your way into a capital raise. Although it does happen, it's harder, particularly in this environment. You got to break through the noise. So, you know, like having the right network, and certainly everyone on this phone knows a lot of people. I think you just have to work your network, but a ton of funds are going to have money, but they're going to be super selective, and the terms are going to change. But if you look back historically, you know, I always try to be a positive person. A lot of great companies have been created in downturns. In fact, every company I've kind of been around since, you know, 1991 has been created in a downturn, quote unquote. And so I think a lot of seasoned investors are aware of this and are trying to look for the diamond in the rough. And if you can put a compelling story in front of somebody, you'll get funded. Because if you're a good investor, if you loved everything at Dow 30,000, you got to love it at Dow 20,000. And if you don't, I'd question the intellect and sophistication of the investor.
I think one of the challenges most founders, entrepreneurs are trying to navigate through is this duration question. And Mac, you kind of alluded to it, as did Andrew. But we spend a lot of time encouraging our CEOs and founders to be self-sufficient. Have at least 18 months of runway, if not longer. You guys, I guess the question is, and Mac's politely saying that if you need capital right now, it's going to be painful, and maybe that might be the short answer. When or what signs would you look at to see like capital starting to open up on terms that aren't as punitive, and how self-sufficient and for how long should companies try to not have to raise external capital?
Yeah, I'll just quickly, as soon as people can get out and go back to work. I mean, talking to a lot of my early stage VC funds, they won't fund unless they can do a face-to-face, because you're underwriting a team, and it's pretty hard to do that over Zoom, even though everyone's trying. I think it's hard to get a sense of all the soft stuff that people look at when they underwrite a business. So I think, as soon as that opens up, there's still a lot of money. But the key thing to remember, take a step, this wasn't an economic shock. This was a health shock. So there's money out there. People are ready to do deals. Now they're just a little more panicked. It's just, you got to get back to work. And I think the money will start flowing for the good ideas. But, it's like last time. I think what happens when the tide goes out, you see a lot of crazy business ideas that aren't going to get funded. And that's probably where the money's going to flow away from. They're not going to take the risks that they once were. They're going to get better deals on better quality companies. And that's probably going to persevere for the next 12 to 18 months, 12 to 2 years, 1 to 2 years. Sorry, can't speak today.
And you have sort of a similar perspective on time frame or signals to look at?
Yeah, I mean, so in the family office space, a lot of families, or some families that I speak with, this is the moment in time where families need to step up and provide, whether you call it philanthropy or do the right thing and help people. So not every family, not every investor, but this is a moment in time where can rates be egregious? You can certainly have terms that are unfavorable, and they're out there. But a couple of the families that I work with really have extended a hand and want to help certain sectors and certain businesses that have really gone through a lot of pain and carnage. And so what I would say is kind of like what Max said, I think there are investors out there right now ready to lend a hand. What has caused a little bit of pause has been the companies are looking for at the PPP program, and what can they get from that first before taking a little less favorable terms. Going forward, I'm not sure when capital loosens up. I think it's out there right now. Private equity firms, venture capital firms need to put money to work. They're sitting on it, and you have to be in the right spot at the right time with those opportunities. And the last thing I'll just end with quickly is, 100 years ago, the Spanish flu lasted 2 years. We're 100 years later, and we've got every eyeball, the smartest scientists in the world looking at it. And, the bullish side of me or the positive side of me says, I'll take the under, and I think we're going to find some solution sooner than most people think. I'll end it there.
Appreciate it. Anyone want to add in their thoughts and or questions to Mac or Andrew before we shift topics? Bob, Bob Posen, you probably have a perspective on this one too, but I don't know if there are any other questions or, Sam does.
Glad to answer any questions.
Peter Aceto, were you going to jump in?
I was, and then my dog started growling at the mailman. So, but no, actually, I didn't really have a question other than to say I'm watching this every day through the eyes of Benny, and I just think you guys did a really good, with the amount of information we have, and the fact that we've never been here before. I think that was very, very helpful. So, no, I don't have any more questions. Just wanted to back the guys up, and it was a good explanation.
Chris, I could add one thing. I
Yeah,
agree
please.
that we're not going to have a V-shaped curve and the U will be quite long at the bottom. So I think the markets have been a little overly optimistic because the relative is improving and the markets are very sensitive to the relative. Yeah, we've had a slowdown in the rates and some states are starting to open up. But I think by May, the reality will set in about how difficult and long it will be for the recovery, as someone said before. And I think that the markets don't seem to have absorbed that. Even if we get a drug, it's going to take a while to implement, and the vaccine isn't for at least a year. So I just, I mean, if you look at stocks, I mean, I was a director of Medtronic. It's now today going to finish where it was roughly in September of last year. And if you look at the cash flows that are likely to come in the next 2 or 3 years, they're maybe 60% of what was projected in last September. So I'm having a trouble making the numbers work on this. And it just, if we think of stock prices as reflecting future cash flows, I just think the market is overestimating those future cash flows in most companies. Of course, there'll be some companies that will do quite well, but that's the minority. So I guess I think we have a little more volatility here before we see the light at the end of the tunnel. Thanks.
This is Peter here, and I actually support your view, but I'm interested to turn that comment into a question and just see if the capital markets people who just spoke have a view on that.
Yeah, and just so you guys are aware, Bob was former vice chair of Fidelity and was the chairman of the advisory board of the SEC. So he's, as bang on as you're going to get in terms of experience and perspective. But yeah, Mac, Andrew, jump on in.
I'll just give quick 2 cents. There's 2 things going on right now. Your prior speaker just nailed it. There's a conflict between reality and hope. And right now, the hope is that with the government putting $7 to $10 trillion into the economy, there's going to be an asset bubble at some point again, because you just can't fight the Fed. But in the interim, there's going to be a lot of reality that sets in, and 30, 40 million people being unemployed and money running out is not a good scenario for the stock market to keep trading up or for capital markets to keep functioning. And until that kind of reconciles, it's going to be a choppy ride. So that's why some people are saying a W are kind of just a bunch of zigzags, because there's a lot of money on the sidelines that's just, basically day trading. And the stock market's never been a good indicator for the real economy, and it's not going to be, in this instance either.
This is Renee. One thing I wanted to add was that when the stimulus checks came out, my husband's company, he works in consumer goods, they saw about a 40 to 50% increase over the sales that they'd seen. They'd seen their sales from what was normal go down by about 100%, and then it came back at 40, 50. But then what they're very afraid of is when those people run out of that stimulus check, which isn't going, in the end of it's not that large, that's not going to continue to fuel things. So it was a kind of great thing to see those numbers pop back up. But unless the government keeps providing that money, they don't know where the market's going to go. So interesting.
Yeah, unfortunately, there's not any clear signals these days. So look, first of all, Andrew, Mac, really appreciate the insights. Bob, thank you and Peter jumping in. I want to kind of quickly go through a couple other things before we let you go off to your Friday and hopefully some margaritas ahead. On COVID-19, unfortunately, one of the great things about having a doctor, especially one with a beautiful baritone from the UK with a great accent, to take us through some of the difficult stuff we have on COVID. But Adrian just let me know that he had an urgent call out. So I'm not sure if he's going to be able to take us through it today. So I'll do my best. Meryl did send out to you guys something that Adrian sourced for us today, and I thought was really thoughtful, because this is going to be, a painful, choppy, long road ahead. And I think mental wellness, is really underestimated for those of us that are kind of stuck on Zooms all day and, try to figure out why we're so exhausted. So I encourage you to have a read. It's 25 points on things to be thinking about for yourselves, for your family, for your company. I just pulled out a couple, that really resonated, for us. But like just thinking about this, have a read through it, checking in with your friends, your loved ones. I had a great call with my best friend from high school this week, who I haven't talked to for about a year. And this one thing that Adrian had encouraged to kind of reach out to people you haven't talked to in a while. In terms of some of the other things in the some good news category, Senso Sarupsan, congrats, he closed his new financing today.
Thank you.
So to Andrew's point, things are getting done, great companies are getting funded. Super excited for the Senso team and getting that financing. We had 5 of the 8 portfolio companies have COVID tailwinds, in part because of the segments they're in and how they're adapting, and thanks to partners like Shopify and what Jamie and team are doing, allowing them to go faster. I know Renee's drinking through a fire hose over at Gentrio in terms of the volume that they're dealing with. We also had 3 companies that received PPP dollars, including a Ninth Decimal with $2.4 million that allowed them not to have to do some layoffs that they were concerned about. And now there's another chunk of PPP coming through, so hopefully that'll keep us through the valley of death for those that are struggling. The other thing I wanted to share with you, and this is the first time, if you don't look at it, I'd encourage you to go to the Ninth Decimal Impact Report. You can get it on a weekly basis. This is US data, but you can get it state by state. This is the first time we saw an increase in foot traffic. So people going to grocery stores more, going to auto dealers more, even shopping mall traffic was up week over week. Airports were up week over week, which you have not seen. So there's some signs of life there. I'll do my best, Adrian, here, say I'm not sure that's good news from a W perspective, because really what we want to get down to is about 1 new case of COVID in the country per million people. And we're still in the US more around 1,000 new cases per day. And so the concern is about multiple hotspots and the W and the seesaw effect. But you are seeing people start to move into the retail footprint, and hopefully in a safe way. And that's a report that's online. The link's there for you. I encourage you to have a look at it. It's a good thing to have in front of you on a week-to-week basis. I think we're also seeing some nice evidence of flattening the curve, but it's also settling in for a long fight and a new normal. So this is some data from the CDC this week, and you can see that from a testing and a percentage basis, we're seeing both testing go up and the percentage of people testing positive go down, which is what you want to see. A little scary on this line, I know it's hard to read, is the bottom where very young kids are getting tested more and are showing positive. So, again, a lot of different data, nothing super clear right now, but again, I think, if you have one number in your head leaving Friday is 1 new case per million people, if we get to that point where, the healthcare system should be able to manage this a lot better. We are seeing some new normal things like Colorado, the state, basically saying no schools opened until 2021. To the comments of both Andrew and Mac earlier, I think the 2 worst quarters economically are probably still ahead of us, and so there's some challenging there. Our PPP plan was passed. Some other great news this week. So the red mask update. We have now 150,000 N95 masks delivered. We've had 12 hospitals had the deliveries made in the last week. Between us and the portfolio companies, $75,000 raised. We had our first delivery in Toronto, thanks to Team Senso. So that's a picture of the nurses. I think at Toronto West, right?
Toronto Western Hospital.
Got their first meal. So we have 6 companies in portfolio teaming together to have bigger impact. There's a screenshot of the Zoom from earlier today. Very pensive people, but doing really awesome work and coming together and having impact. So what's coming up? We've got discussions, and thanks to Kim. Looks like we've got a partnership approval with Uber, having conversations with Shopify and Salesforce. And our goal is to basically get a care package that includes things that docs and nurses need delivered to at least 7 hospitals in 7 cities every week. So that's what we're working on through the next week. And it's a beautiful team effort. You can see in the bottom right, 9th Decimal team, one of their clients, Dunkin' Donuts, chipped in and delivering coffee and donuts to hospitals too. So really fun to work on. And then so our last topic. So in 2 weeks, we're going to have a conversation about reboot work, whatever that means and whatever your haircut is going to look like. I've got to have one this weekend. My daughter's going to give it to me. I have no idea what I'm going to look like when I see you guys in 2 weeks. But if there are other topics or things that you want to lean into, for our next get together in 2 weeks, let us know. But Michael Sission's doing a lot of great work working with the companies like Ambev, Kraft, as well as our portfolio companies on this idea of what does work look like if we're in this for a year and a half, and how do companies adjust to that and think about it. And so really looking forward to that conversation in 2 weeks.